Hello traders, we are back to the next topic, which is the confirmation of rejection. So in this topic, we'll be learning about candlestick reversal. Whenever a price has reached our danger zone, we need to monitor whether the price has reject or break out from the zone. So this is very important. Whenever there is only confirmation of rejection, then only we can look for setup. So let's get into it. What is confirmation of rejection? In our confirmation of rejection, we'll be using the candlestick reversal signal, which in short form is called the CRS. This will be our confirmation of rejection. So the CRS is to predict a change in price direction. When a price reaches a major support or resistance, we do not enter the trade until there is a signal given that the price has rejected the zone, or it will break or continue the trend. So what it says here is like this. So for example, we mark the danger zone, right? This is our danger zone. Whenever a price comes to the major support or resistance, we do not enter the trade until there is a confirmation of price rejection outside of the zone. Even on the breakout, when the price break out from the zone, when it comes to retest, it must show a confirmation of rejection of the zone when it comes back to retest the zone as a new support. With this confirmation, then only we can find setup. It is important to spot these rejection zones to know when to avoid a trade and if there is any opportunity to enter the trade. So guys, we need to be aware. That's why the zone that we mark has to be as accurate as possible, which you learn in marking the danger zone. So this is very crucial. Then only we can know the price whether has touched the zone or it gives a false alarm. Sometimes when the price hasn't reached a zone, for example, this is our resistance danger zone, price haven't touched the zone but already made a bearish engulfing. So this is considered high risk. A lot of traders been trapped, and then price continues to go upwards like this, and then slowly play in the zone before it starts to show rejection from the zone. Please be aware of the zone that you mark, and only there is rejection with confirmation, then we will enter the trade. So let's look some of the CRS, the candlestick reversal signal. The most common and the most famous candlestick reversal pattern that the traders always use is the engulfing candle. We have learned the engulfing candle in the early class. So this is the bullish engulfing and the bearish engulfing. It's very easy to spot with this, isn't it? Alright, so let's have a look at some other candlestick reversal signal. Alright, let's look at some of the candle reversal signal pattern. So the common one, the bullish and bearish engulfing, which you guys are very familiar with. Second one, there are some, is called the tweezer tops or the tweezer bottom. Now all of this, you can find it in google.com. You can go and do further research on the CRS, but you don't have to go into it very much. We just use this CRS as our confirmation of rejection outside the zone. Now let's look at some of the triple candlestick, which is called the morning stars, evening stars, the 3 white soldiers and the 3 black crows. These two are also one of the most common CRS that we will be using. 3 inside up and also 3 upside down can be used. And there are actually a lot more in Google. Please go and do further research. Familiarize with some of the CRS pattern, then you can use that as a reference for our confirmation of rejection for our danger zone. So let's look at the SOP for confirmation of rejection. First of all, the price must, and let me highlight this again, must reject outside of the danger zone. Please remember this, guys, must reject outside of danger zone. Secondly, price has to show candle reversal signal inside of zone and is not outside of the zone is considered high risk. Let me highlight this again. High risk when the CRS is inside of the zone. It could be a false alarm. So example, when you have a danger zone, this is the one that we mark, and then price show a bearish engulfing. Example, inside the zone, as price comes up to the danger zone, engulfing inside the zone, this is very high risk. We want the engulfing to be outside of the zone. The candlestick body has to close outside of the danger zone. Doesn't matter which type of CRS, whether the three black crow, so you have the bullish, then you have the bearish one, two, and then the third one, they close outside the bearish candlestick. This, yes, is acceptable. So if the three black crows, the third candlestick, close outside of the zone, then this is considered low risk and is considered as a confirmation of rejection. So this is one of the example. And lastly, if the danger zone SNR marked at weekly time frame, therefore the confirmation of rejection is in daily or the H4 time frame. So remember guys, when this is marked as the danger zone weekly, alright, weekly danger zone, then the confirmation of this area can be daily time frame or the H4 time frame, not H1 and below guys. No, we do not want H1 and below. We only want the daily or the H4 time frame if you mark the danger zone at the weekly time frame. So weekly, you can check the confirmation at 2 time frame and below, which is the daily or the H4. So I cannot emphasize even more than this. Remember guys, price must reject outside of the danger zone. The CRS have to show outside of the danger zone. Means the candlestick have to close outside of the danger zone, not inside the danger zone. Like this is very high risk. And if you mark the danger zone at the weekly time frame, the rejection of confirmation has to be in daily or H4. So if you mark the danger zone at daily, your confirmation of time frame for rejection is H4 or H1. Okay, I hope you guys are clear with this. This is very important. So let's look at the example of a price rejection. So here, as we can see, this is the price of the weekly time frame. So what we should do is we mark this horizontal line from the edge of the resistance, okay, and then this is the shadow. So and then we mark the zone from the edge of the resistance to the shadow all the way up. So this will be our danger zone area. Okay, so this is the DZ SNR, which is in the weekly time frame. So here there are 1, 2, 3, 4, 5 of situation where the daily and the H4 time frame shows the rejection. So the daily and H4, as I mentioned again, is the 1 or 2 time frame lower than the weekly time frame of the danger zone SNR. So guys, as we have learned from the previous slide, the rejection of confirmation has to be outside of the danger zone. So matter whether daily or H4 time frame, since this is the danger zone for weekly time frame. So guys, take a guess. Which one do you think is a confirmation of rejection? Which one is not? I'm gonna give you a few seconds. Let's try this out. Have you marked yours? Now let's look at the result. So this is yes, 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 no, no, and no, no. Remember guys, rejection, not at the top after the breakout and then show a bearish engulfing. Why? Because bearish engulfing is for sell setup. Okay, so this one, the price, the bearish candle is still inside the zone. This one, the bearish candle has closed outside of the zone and the rest of it. Okay, so this one, look at this, both candles close outside of the zone. This is because both has touched the zone. Doesn't matter whether both or either one of this, as long one of it touched and then close as a wick or a shadow and then continue shows a rejection. This is very good, this is very good, and this is very good. Okay guys, so have you got it right? I hope so, because this is very important for us to identify the correct rejection of confirmation before we even look for setup. Alright, so now let's look at the weekly time frame danger zone for support. First of all, we go to the line chart, we mark the horizontal line at the edge of the support, and then we draw the zone all the way from the edge of the support to the wick or the shadow. Okay, so this is the danger zone support for the weekly time frame. So now, when this is a weekly time frame, which time frame do you think we should look for the confirmation of rejection? It should be the daily or the H4 time frame. If you have this right, then congratulations. If not, now you will learn. Okay, so now out of these 5 patterns, which one do you think is the confirmation of rejection that is acceptable to be used, and which one are not? Have you marked it? Okay, let's look at the result now. These 3, yes, can be the confirmation of the rejection, and it is acceptable, and these 2 is not at all. Please guys, anything that we see is that the price doesn't close the candlestick outside of the zone is very, very high risk, and this one is definitely is not. All right, so have you got the answer right? If you do, then it is very good. Okay guys, we are at the trading view chart. I'm going to show you some examples on the trading view chart. So I'm going to mark this danger zone here. All right, this will be our danger zone. Okay, weekly chart, we go to the line chart, you see exactly I mark it at the edge of the A. Okay, and then you're supposed to mark this as your second movement, like this example, second movement, but I'm going to skip that step. I want to show you what is the rejection of confirmation. Go back to the candlestick, and then we mark the zone. So mark the zone. Since this zone is very small because of the shadow, it's also very short, so we just mark it short like this. It's okay. That's it. So once we're done, what should we do? Remember guys, on the weekly time frame, which time frame is the confirmation that we need to look for? It's the daily and the H4. So there we go. Okay, we found out here. So we do not find any engulfing on the daily time frame. Let's go to the H4. Same goes as the H4 time frame. You see, there's a H4 time frame showing bullish. This is a manipulation from the market movers. So have to be careful which bullish engulfing did the price make to. So we do not want these kind of things. So what pattern do we can see here from the CRS signal? So you found out what is this pattern called, guys? Not sure? Okay, let me show you. Let's go to here. We're gonna look for bearish harami. There we go. So this is how the bearish harami looks like. You can see, I'm going to show you in the bigger picture. There we go. See, there's one bull and then 2 bearish candle that covers up this bullish candle. Same goes with this one. One bull candle, and then there are 2 bearish candle that covers up this one. So this is considered as a bearish harami, which is the reversal signal. So this is just one of the example. I'm going to show you another example. This is from the pair Euro CAD on a weekly time frame. So we go to the line chart. We're supposed to go to the line chart and then mark the edge of the resistance with a horizontal line, and then we mark our second movement. So this will be our second movement. So we go back here to our candlestick and then mark the zone. So from this week all the way to the edge of the resistance. There we go. So now remember guys, on a weekly time frame, which time frame is the confirmation of rejection that we need to look into? That is the daily and the H4. Okay, I'm gonna show you this. Look at this guy. This is the danger zone SNR, isn't it? On the weekly time frame. Look at this. The wick has touched the zone and come down and close all the candlestick below the zone. So this is considered as a valid confirmation of rejection. So let me show you on the daily first. At the daily, price made two. It's like the Harami as well. Harami bearish, but this one is too far away. You see, price have to react under 200 pips for this. Comes back, and then after it make the bearish Harami, price come back up and continue downwards. Why not we look at the H4? We could have much better opportunity to entry at the H4. So at the H4, you see guys, after the rejection happens, price made a bearish engulfing, stating that this is a confirmation of rejection. So when we have this kind of situation where price has made a strong rejection, what we should do is, since this is a weekly time frame, we go back to our candlestick. Sorry, we go back to our line chart, and then we mark at the next support. So the next support for this will be somewhere around here. Okay, guys. So this will be our danger zone for our entry of sell. What I mean is like this. So we go to the H4. Okay, we found out that there's a bearish engulfing on here. So how do we find continuation setup? As we can see, there's one here. I believe there's a setup inside here. We probably can have a look. H1, M30. Yes, we could try to enter the QMR here, but this is quite risky, and I think the zone is a little bit too big as well. Or it's a 10 pip zone, so it will be fine. If you think 10 pip is fine for you, then you can go ahead. Okay, so I'm gonna show you some more example if we have any continuation setup. There are a lot of continuation setup even here. Here we go. We have SNRC1. This is a very beautiful SNRC1 continuation setup. Okay, after price has done a rejection on the H4. Let's go back here. Yep, price rejected this area. Okay, and then the confirmation is the H4. So price comes back up here, touch this setup over here, and then continue to go down. So now, how do we know that our danger zone of this setup is still safe to entry at a sell? As long price hasn't touched the bottom part on this area here. Okay, so this is our area down here. So this will be our danger zone, even though price has moved a long way down. Okay guys, so this is just a note. So by almost at the end of the class, you'll be learning all this in the full package, where you learn about roadblocks and danger zone after your entry. Okay, so don't worry guys, we will learn all this even further later on. This is just to show you the confirmation of rejection. Okay guys, so this will be your assignment. You need to do 5 screenshots of this danger zone SNR with confirmation of rejection. So you go to the chart, identify and find the price reject from danger zone. So it doesn't matter, you want to do it on the pair, gold, it doesn't matter. As long you're using the monthly, weekly, daily time frame as your major time frame for danger zone SNR. Now this time you have to mark the second movement as well. Okay, so I'm giving you an example of how you can do your assignment for your danger zone SNR. First, we go to the weekly danger zone. Okay, time frame. For this case, this is a GBP CAD on the weekly time frame, and this is the danger zone support. Okay. Next, we change it to the line chart. We mark the horizontal line. Second step. Third, we mark the second movement. Correct? Okay, so second movement. This one can be second movement as well. Alright, so this one we mark the horizontal line. And thirdly, remember guys, to mark the zone. So mark the zone from the edge of the support all the way down to the shadow or the wick of the candlestick. Lastly, we can see there are rejection zone with bullish engulfing. So this is a H4 rejection. See, there's a long wick with a bullish engulfing pattern. All you have to do is just like this. Mark the danger zone from the weekly or daily or monthly. Then go to the line chart, mark the second movement. And then third, finally draw the zone. At fourth, you need to show the rejection. So in this case, I'm showing you a bullish engulfing. As I said earlier, it doesn't have to be a bullish engulfing. It can be any candlestick reversal signal. For example, shooting star, inverted hammer, okay, 3 black crow, 3 white soldiers. Okay, most important, whatever the candlestick pattern that you choose, it must have the confirmation candle out of the zone. All right. So once you are done with your 5, don't worry about getting it mistake or wrong. Okay, this is where you will learn. Just do it on a 5 assignment, save it in the folder. At the end of the course, you will do your submission of your assignment. Then we will have a look. See you at the next class.